Good afternoon, everyone. My name's Helen McIntosh, and I'm the president of the South East London Chamber of Commerce. I'm delighted that we're here today for yet another one of our events with our chamber partner, Thackray Williams. And today's subject is a guide to buying your first home. I'd like to hand over to my fellow board director, Yildiz Betes, who's going to tell us a little more.
Thank you. So, as part of the Chamber, we've been running regular webinars on topical legal issues, and today is about top tips buying your first home. We do have two others coming up soon, which are starting up your own business on the 22nd of June, and also wills and tax planning on the 29th of June. But back to today. So today we have an expert team of my fellow colleagues from Thackray Williams. Firstly, Adrian Whichcord will be speaking about how to be prepared for buying your first home. He specialises in property transactions and has over 20 years of experience buying and selling residential property. After that, Stuart, Ruff, a partner in the family team, will talk about cohabitation agreements. More often than not, people are having to buy their first home with a friend or a partner, and he will talk about what you should be thinking about when you do buy something with another individual. And finally, Louise, Toye, our private client solicitor, will talk about the bank of mum and dad. First-time buyers are struggling to buy their first homes without support and finance from their parents, and she will talk about the best way to pass that money over and how to protect the parents in terms of the financial support they'll be providing. So without further ado, I'd like to hand you over to Adrian. Thank you.
May I just interrupt? I'm going to use, as being the president, because I forgot to tell everyone that we're going to have questions at the end. There's no chat facility in today's webinar. So if you can put an electronic hand up at the end for your question. Thanks.
Lovely, thanks very much for that. As you would have said, I'm one of the solicitors at Thackray Williams, deal with all things property, principally residential property. And I thank Yildiz very much for pointing out that I've been doing this for over 20 years. Thank you. When thinking about what to talk about in respect to top tips for buying your first home, I thought, well, I could spend the entirety of my 10 minutes speaking about all the sort of things that I look at and do, but to be honest, it's a little bit dry. As solicitors, we look at the title to the property, we get various searches in, see what the council's records regarding the property might be, look at your mortgage offers and make sure that we've dealt with any sort of special conditions there may be, but everything of it's quite dry. So instead, I thought I'd just concentrate on some of the things that I think you should be thinking about almost before you even speak to us, to make sure that you're in the right place to when you do come to us, that the transaction can go through as quickly as possible. So if I can just move on to the first slide. So as I say there, finances, yes, that's obviously the main thing that when you're looking at buying your first home is going to be most important to you, making sure you've got the money together, and it's saving a deposit is becoming a harder and harder thing to do. But I was thinking, what else could you be thinking about before you get to even viewing properties with agents and whatnot? I think the first off is to be thinking about what sort of property you're actually wanting to buy, and actually trying to do a little bit of background research beforehand as to actually what is out there and what are the sort of things that might crop up depending on the type of property you want to buy. So yes, you're going to be thinking of house and flat, but a little bit of background research would help you perhaps in being able to think about what sort of questions you should be asking the estate agents when it comes to considering whether or not you want to put in an offer. So I ask, what's the difference between a freehold and leasehold? It's perhaps stuff that you already know, but when you buy a house, more often than not, you're buying a freehold. So you're buying the house, the land that comes on it, that comes with it, the air up until as far as you can go, the ground as far as you can go down to the centre of the earth in most cases, and that's what you're buying. With a leasehold, you're not buying a building. You're buying the right to live somewhere for a certain period of time. And with all of these things, they can, it makes it quite a big difference to how you're going to be able to live in that property, should your offer be accepted and it all goes through. We've got hybrids such as share of freehold. So quite often you'll see properties marketed by the agents as being share of freehold. In general, that still means you're going to have a leasehold. Your right to live in a property will still be under a lease. You just own a share of the ownership of the building and such. And you can be looking at where. It sounds silly, but there's an awful lot of information that's out there that's available to you before you even put in an offer on a property. A lot of which will be relevant to you and will help you to be able to decide whether or not this is something that you're going to want to go for in the future. Now, I talk about thinking about things that you can get things that get yourself ready to go. By that, there's an important part of that is making sure that you've got a lot of the information together that your solicitor is going to need, or your conveyancer is going to need, before we even start the process. So you'll be getting your financial information together. You'll be going to talk to mortgage brokers, perhaps about what you need financially, and getting all your financial documentation together to show that you can afford a property. But please bear in mind that for us, when you come to us, all of this information you're going to be giving to us as well, so have it all in place. But when it comes to the financial side, it's not just that you can afford a property. We're going to be looking at source of your funds. So going back into the past to see, yes, you've got this money here to be able to buy that, but where's that money come from? So have yourself a pack of information ready so that when we ask for it, when you instruct us, you can just say, here you go, here's everything. And that helps us really to get cracking straight away. If we could just move to the next slide. So I think one of the most important things when looking for a property is to find out as much as you can about that property via the estate agents at the point of making an offer, so that you know that as far as you can, that a lot of the questions that are important to you are covered off as far as possible, and then we can then double check that and make sure everything is all checks out. So I say there, what are your plans for the future? So you may be thinking, here's a fantastic looking house. It's in the right location. I've checked it out online, and there's nothing I can find that concerns me. But you may be thinking, I'm wanting to put an extension out the back to make this exactly what I want. And you might find then that you instruct us to do the transaction, and we start investigating the title, and lo and behold, there's various reasons why you can't put an extension out the back. There might be restrictions on the title which go against it. There may be drainage that runs underneath it, or in the case of a client that I was speaking to last week, and that's exactly what they wanted to do. They wanted to put an extension out the back, but it turns out they themselves had done their own research, found out that there was a right of way that across the back garden, and that was going to stop anyone being able to build an extension. The reason why I say all of these things is to try and do a little bit of research first and thinking about what your plans are, because you can then speak to the agents when considering making an offer to see if there is an issue with what you're going to want to do. And there may be various things that may impact upon your plans, or whether why this property is on the market, or may have been on the market for some time. Simple things such as if the property's been on the market before, it's not gone ahead, and it's come back on the market, and now you've seen it. Ask the question of why did it not go ahead the last time? Is there any specific reason? Again, is that then going to impact upon your plans? If we move to the next slide. In particular with leasehold properties, there's an awful lot of problems out there at the moment. We've all have heard about it post Grenfell, with cladding and or the way that properties have been constructed over recent years. So if looking at a leasehold property and it's got cladding on the front, ask the questions. Has this cladding been inspected? Are we sure that that cladding is safe? The reason why I say all of these things is because when you instruct us, we're going to start spending money, your money, on that property. When we request searches, when you ask for surveys to be done, all of these things, it's going to be an expense. You're going to be paying money to mortgage companies in valuation fees and all that kind of thing. Better to find out if there's any issues, known issues, right at the start. And that's my top tip, making sure that you know that you have all the information or basic information to hand that makes you confident that there doesn't seem to be any particular issue with this property. And then yes, we'll come along and we'll go through it with a bit more of a fine-tooth comb, but there's nothing obvious that's going to get in the way of a transaction proceeding. With leasehold properties, do look at the length of the lease. Any leases which are of, well, certainly if you've only got 90 years left on the lease, you're already starting to think that that lease needs to be extended. The longer you leave it, the more expensive it will be. Ask about ground rent and service charges, not just so that you know what the costs to you are going to be, but also there are issues with ground rents that have been charged in the past, and what that can mean for you both when it comes to, if you do want to extend your lease, what the likely cost may be, but also just in general terms, whether mortgage lenders are going to be happy enough with the ground rent that's going to be payable in the future. Also be thinking about things such as lease restrictions. So whenever you have a lease, even if it's share a freehold, that lease will govern what you can and cannot do with that property. So, for example, if you, again, go in there wanting to make alterations, will the lease permit that? Or are you going to need to get consents? Can you even get consents? Does the lease actually have an absolute prohibition on you making alterations? From there, right down to if you've got a dog or a cat, can you have those in that property? Under the lease, there may be restrictions. So with all of these things, go forearmed, which is forewarned, and then and if there's any doubts, ask the agents about these things. Make sure you found out as much information as you possibly can about that property before you even put your offer in, because otherwise it's only going to come up and surprise you later on. If we could just move to the last slide. So I think that's, in general, that's my top tip, because the more research you can do on a property before even instructing, the less surprises you're going to have when we come along and start going through everything and reporting to you in detail on all the restrictions. Yes, there will be things that come up, but it does minimize it. And the only other, the main tip that I would be saying is just do not be afraid to ask this. I will speak to anyone and everyone. Doesn't matter if you're a client or not. If you're asking for a quotation from me as to what fees might be, but there is something you want to discuss as part of that transaction, ask me the question straight away. Best to run through that from the word go, and so at least we know, you know, and I know what we need to do. And as transaction proceeds, if there's any questions that you have, any doubts, any worries, then that's what we're there for. That's part of our job. So please do ask us the questions. I'm sure there'll be further questions later on because of this, but that's my top tips for a first-time buyer from a property lawyer's point of view. So with that, I will hand over to my colleague Stuart.
Thank you very much indeed, Adrian. Good afternoon, everyone. As Yildiz said, I'm a partner in the family team, and if it makes Adrian feel any better, I've also been doing this for over 20 years. So some comfort there. I'm going to be talking about cohabitation agreements, or perhaps, as Yildiz alluded to a bit earlier, could also be called co-ownership agreements, because it doesn't necessarily just mean two people who are actually living together. I once had a case where there were two university friends who decided to actually buy their old university house. So it doesn't just relate to cohabitants, but for the purposes of this talk, I will approach it on the basis that it is a cohabiting relationship. And because of the time constraints, this can only be a relatively quick canter through the agreements, but it should suffice to give you a bit of a general overview about some of the things to bear in mind ahead of the day that you pick the keys up as per the slide. But obviously, bespoke advice on things like this should always be taken. So the first thing is, what is a cohabitation agreement? The answer very simply is that it's an agreement entered into by cohabitants that sets out what their intentions are in relation to the property, but importantly, any other assets that they own, either jointly or individually, and what should happen to the property and the other assets in the event that a relationship breaks down. Why should you have a cohabitation agreement? Well, people in a cohabiting relationship often have the assumption that if they're living together but are not married or in a civil partnership, then common law marriage protects them in the same way that it would if they were a married couple. The thing is, there is no such thing as a common law marriage. You are either married or you are not. And couples who live together do not have the same legal rights as married couples or those in a civil partnership. So a cohabitation agreement can provide both peace of mind and certainty about the financial and property owning aspects of a relationship. And by coming to an agreement in advance of purchasing a property and living together, the whole point of the agreement is that both of you would have a clear understanding of what your financial commitments are and will be going forwards. It can avoid any misunderstandings regarding your individual rights and responsibilities during the course of the cohabitation, particularly in relation to the ownership of the property. It can avoid difficulties and disagreements in the event of the relationship breaking down. And then if there is a disagreement after the relationship has broken down, the agreement will provide clear evidence of what your respective intentions are if you have to have an argument going forwards. So in terms of what should be covered in a cohabitation agreement, well, the simple answer is as much as you can think of. These are very flexible documents, and it's not just a case of a simple template, one size fits all, but there are certain things that do need to go into all of them, but they can be as flexible as you need them to be. So firstly, one of the main reasons for having the agreement is to set out ownership of the property. Who owns what and how much of the property do they own? Likewise, a deposit. It may very well be that one person is contributing more to the purchase price. Louise is going to come on and talk about bank of mum and dad, and these days it's not uncommon for parents to assist. So a cohabitation agreement can record that somebody has contributed a specific amount of money to the purchase price, and in the event of a relationship breaking down, that person or people who have contributed should get their money back. So it can essentially ring fence a particular contribution. It can also set out what share of the mortgage or the rent each of you will pay, how the household bills will be dealt with, what should happen in terms of running bank accounts. Will you have separate bank accounts with perhaps one joint bank account into which you both make contributions to pay the outgoings on the property? How are the financial arrangements going to be addressed? It can also deal with things such as cars, furniture, CD collections, or whatever it may be, both bringing the things into the relationship, but also what's acquired during the course of the relationship and how that should be dealt with. It can deal with payments of debts. Usually you would have no responsibility to pay the other person's debts, but there might be reasons or a particular circumstance where you think that something should be done. So, for example, if a loan is taken out to fund some work on the property, but for whatever reason that loan can only be obtained in the name of one person, you might want to specify that in those circumstances, both co-owners would be responsible for it, notwithstanding that it's only in one person's name. Pets, often a very emotive issue. Who gets the cat, the dog, the budgie, whatever it might be? Well, that can be included in the agreement as well. And also there might be things that you want to leave to people through inheritances or something, and that can also be set out in the agreement. So it's a very wide-ranging document that can cover the individual circumstances with a great deal of clarity and flexibility as much as is needed in the circumstances. The next question is really, is a cohabitation worth the piece of paper that it's written on? Because sometimes people wonder whether or not a document is or is not legally binding. But a cohabitation agreement is a legal document, and if it is properly executed as a deed, which basically just means that it has to be expressed as being a deed and signed and witnessed by the parties and two independent witnesses, it would be enforceable by the court, provided that you have been open and honest about your financial circumstances and contributions at the point you are negotiating and entering into the document. So it's very important that you obtain legal advice, either to have a document drafted, or indeed, if you are the one being asked to sign a document, to ensure that it gives the best possible chance of doing what you want it to do. So really, in summary, a cohabitation agreement should be viewed a little bit like an insurance policy. It might be rather unromantic to talk about these things when you have the excitement of moving into a property together or something. But the whole point is it provides the certainty and clarity to avoid any future disagreements, which can obviously be very expensive and very stressful. And you don't want to potentially end up leaving your future financial circumstances at the discretion of the court. It also has the advantage that setting everything out in advance can help keep relations amicable with the other co-owner stroke cohabitant. And that, of course, can be very important if there are children in the relationship, because your parenting relationship will endure long after the relationship may break down. So that really is my top tip. Think about the agreement to provide certainty and clarity about what the arrangements will be. I think now it's Louise.
Thank you very much. Yes, I'll allow some time to have the slides put up, but I'll give you a bit of an introduction to me in the meantime. So my name's Louise Toye. I'm a solicitor in the private client department at Thackray Williams. So we cover a range of services, being trusts and tax advice and wills and probate, powers of attorney. But today I am going to be focusing on the subject of the bank of mum and dad, being where you're helping others get on the property ladder. Of course, it doesn't necessarily need to be your children, but it most often is. So if we go to the next slide, please. Thank you. So when you are planning to assist someone with purchasing a property, you need to decide whether you are giving that money as a gift or as a loan. So if you are giving it as a loan, it would be best to have a formal loan agreement in place, setting out the terms of repayment, etc., any interest. And if it is a gift, you'd have a deed of gift as well. And this is, again, something important. It's good to have that evidence just in case HMRC further down the line, and I'll get onto this in a minute, post-death, a query whether this money was meant to be owed back to you or not. So it's good to have evidence of what was the intention at the time. If it's a loan, you'll also need to want to think about whether you want a simple cash entitlement in the property, similar to, say, a mortgage where you have a charge on the property, and if it's sold, you get your cash back. In which case you need to think about, do you want to index link it? Do you want to charge interest? Or instead, are you contributing capital to this purchase in order to have an interest in the property, i.e. having your name on the title with the others that will be living in it? So if it is a loan, on your death, it will be seen as an asset that is to come back into your estate. So that means that when all your assets are being assessed in the terms of their value, you would also be putting down the loan value as well, because that would be seen as coming back into your estate. If it's a gift, and I'm sure you've all heard of this before, there's a 7-year rule. It means that if you are to gift money to somebody and you die within 7 years of said gift, what will happen is it will be treated as if you still own that money, even though you do not have that. If you survive 7 years, then it is out of your estate, and you don't need to worry about that. So what happens, however, if you do die before 7 years after giving a cash lump sum to someone to purchase a property? So what essentially happens is that you as an individual have what's called a nil rate band allowance, which is at present £325,000. And that is the portion that you, a tax-free allowance that you apply to your estate on death before inheritance tax becomes applicable. Now, if you're doing lifetime gifting and you die within 7 years of making that gift, what happens is it starts to eat into that nil rate band. It chomps away at it, so that then there is less of that available to apply to your estate when it comes to assessing your other assets. Next slide, please. Thank you. So when you are gifting money to, say, your children to buy a property, you need to look at how best to secure that. And obviously Stuart has already commented and talked about cohabitation agreements, and then depending on what the relationship is, of course, maybe pre or post nuptial agreements as well. But from what I do as well, we do declarations of trust. They don't tend to go into as much detail as a cohabitation agreement. They are simply there to record the ownership of the property, and very similarly to a cohabitation agreement, states what the capital contributions are by the parties, and how that ownership is going to be recorded, that whether that is stating a fixed percentage share at that point of signing it, saying, oh, look, it's 60-40 split, or it might be the fact that you have put money in, and you look at whether you might be contributing more in the future, and there would be a calculation in there to state how it would be calculated on terms of the ownership percentage at a later date, i.e. when that property is sold or for any other reason that it needs to be valued. Okay, next slide, please. Okay, so when you are gifting money to a child to help buy a property, what you need to think about is have you got any other children who are perhaps not in that position of buying a property, and are therefore going to think that it is sort of unequal in terms of the support between the children. One of the common things that might happen is that a parent dies within 7 years of giving that gift to a child. It eats away at that nil rate band that I mentioned earlier, which means that potentially, if it's a taxable estate, it means that more of it will be taxable, which of course means then less inheritance for everybody at the end of it once the tax has been taken. You'll also need to think about perhaps if you have wills as well, whether you want to include a legacy in your will to the other children who haven't had that assistance in your lifetime. And that could be by way of simply saying, I gift X you know, an appropriate amount of money, or you could use what's called a hodgepodge clause. I promise that is not a made-up word. It is actually called a hodgepodge clause. And it essentially says, so if you've got, you know, your standard will that says, you know, I gift everything to my children in equal shares, what it would also state is that your executors will have regard to a gift that you made to, you know, child A on X date, so that you're not specifically saying earlier on as a date of gift, but they're just taking that into consideration when they do that split of the residue, that they can see that a child has essentially received a portion of their inheritance in advance during your lifetime. It is always important to keep wills up to date anyway. If you've got children as well who are buying a property with another person, and it is, say for instance, they're buying it as tenants in common as opposed to joint tenants, it means that if it's tenants in common, their share of the property will go in accordance with their will rather than automatically to the other person named on the title. So although a lot of people seem to not think that they need to do a will for many years, I would always say if you are buying a property with another person, whether it's equal or unequal shares, you know, try and encourage them to do a will as well, to make sure that it is going to who they wish. And I think that is it. I think in conclusion, really, if you're going to be gifting money to children or anybody to get on the property ladder, you know, seek some advice first, because what you want to do is, you know, we would go through a number of questions with you. You know, what is your estate looking like at the moment? Is it already a taxable estate? Have you made gifts or set up trusts in your lifetime? And all of the little sort of catch you outs that HMRC have in place now, just to make sure that you're doing these gifts or loans in the most tax efficient way. Thank you very much.
Thank you. Goodness, that was excellent. And the one thing I will advocate, having you know, owned property with other people in the past, various properties, I would absolutely endorse, always get legal advice, write it all down. And especially where the pets are concerned. Very important. Now, do we have any questions? While everyone's thinking, I've got one of Louise's, maybe my little fuddle brain, I think. But Louise, you were talking about, you know, someone gives their children, say, some money, but dies within 7 years. And we know that the tax-free on death is, what was it, 325,000. What is it if you died, say, 3 years after the gift? Is there any tapering allowed, or?
Oh yes, good question, Helen. Thank you. One of the really common things is that people ask is, oh, I've heard of taper relief. What's taper relief? You know, if I've survived X number of years, if not the whole 7, you know, do I get any sort of relief there? Well, it comes back down to this nil rate band amount. If you are gifting a sum of money that is within £325,000, yeah, the effect of that is simply that it eats away at that tax-free allowance. So, yeah, you know, essentially, if you've gifted 325,000 and you die within 7 years, there is 0 to apply to the rest of the estate. Now, if, say, you had gifted £350,000 to somebody and you die within 7 years, what it means is, first thing that happens, you use up that £325,000 nil rate band, and oh look, we've got an extra £25,000 here. What happens to that? That is taxable. That is taxable at 40%. And what it means is that the person who has received the gift is the one that is liable for the inheritance tax. Okay. Now, that's when taper relief comes in. If you have survived 3 to 4 years, 4 to 5 years, 5 to 6, etc., then you pay less of the tax on that. So, for instance, if you had survived 3 to 4 years, you'd be paying 80% of the tax on that tax applicable to that extra £25,000, etc., and it goes down incrementally. So that's how taper relief happens. You only get taper relief when that gift becomes taxable if it's gone beyond that £325,000 nil rate band amount.
Thank you. So the kids basically want to ask for as much as they can possibly get. from the parents?
Well, as long as they've got leftover money to pay any tax on it if the parent dies within 7 years, because otherwise it's going to be a little bit of a problem. You know, really, in terms of gifting money, it's just always get advice. And I think if you're gifting money a very large amount, sort of over £325,000, look at what other resources your children have, what the options are available should they become taxable, and how best to get that repaid, should it fall on them to pay that portion of the inheritance tax on that particular gift.
Thank you very much, Louise. Do I have any other questions? Do I have any questions? Sandra, can you see any little hands up?
No.
Oh, yes.
Oh, Myra.
Yes.
Hiya, can you hear me?
Yes.
Can't see you.
Yeah, lovely, thank you. How when it comes to contacting the agents for viewing the property, some of the agents are insisting on getting the financials checked out by their in-house mortgage advisors. How do you walk around that? Because 1 or 2 agents have declined even the viewing, like the first viewing, if you don't go to their mortgage advisors.
Who's going to do? Oh, Adrian?
Best idea with that one. So there's no actual easy answer to that one, because you hear of it all the time now, with agents sort of saying to their vendor clients that or we will pre-qualify anyone that comes to view the property, so that we can make sure that any offers we receive, we know that the buyer is going to be good for the amount that we're asking for. There's nothing to say that an agent should need to do that sort of pre-qualification process, but it's not unheard of. In fact, it seems to be quite a popular thing, especially in London at the moment. It's all down to the relationship between the vendor and the estate agent as to whether that is something that the agent should be doing, provided they've got the authority from the vendor that yes, you don't have to show the fact that we don't want you to show anyone around our house unless that pre-qualification has happened. Then there's nothing that you as a buyer can do about that. You also then have the problem, even if you then, as a buyer, have all of your, so you've got your mortgage in principle already sorted out. Most people do these days before viewing. You still get pressure, even if you're like your offer is then accepted and you've already got your mortgage already sorted out. You'll find pressure from certain agents to go through their own financial arm again. It's purely because the agent's financial advisor side of it would get money from the lender if the mortgage is placed via them. But in short, there's nothing to stop any agents making sure that you are qualified via them in the first place. And unfortunately, it's just one of those hoops that you have to jump through if that agent has got a property on that you're interested in.
Okay, so is that helpful, Myra?
Yes, so there's no solution, like Adrian mentioned, which is really disappointing.
Yeah, thank you. I see we have a question from Yieldits.
Yeah, hi, thanks. It's probably to Adrian as well, because I'm even a bit confused as where we are with the ground rents and the changes to the leases. So can you tell us a bit more what's happening to ground rents and leases?
With ground rents has been a real hot topic over the last certainly the last 3-4 years, but say over the last 10 years. Ground rents are a payment, I'm sure most of you know, but ground rents is just a payment to the freeholder of a building as a rental for your leasehold. So despite the fact that you pay a tidy sum of money for that long lease, you're going to be paying an annual payment to the freeholder for the privilege of being in there still. Now, historically, you can go back sort of 30-40 years ago, the ground rents are supposed to be nominal, and £10 per annum might be something you've seen, or maybe sort of £100 rising to £500 over the course of that lease. But developers found a way of monetizing their developments in a way which made more money for them. And so ground rents over the years have become a lot more expensive, and it's not unheard of to see in London ground rents starting at sort of £350 a year, or maybe even more. And what they also do, you'll find review provisions in your lease. You used to say in a popular, say, 125-year lease period, you might find that the lease increasing by a certain factor every 25 years, but all of a sudden, because developers like to make as much money as possible, you found leases where the ground rent was sort of going to be reviewed every 10 years, and in certain leases there were leases where ground rents were going to get doubled every 10 years. Now, you can think about why or not some purchasers, solicitors agree to some of those figures. The worst one I've had so far was a lease in Erith, where the ground rent initially was £375 a year. It was doubling every 25 years, not every 10 years, but every 25 years. But the length of that lease is 999 years. I mean, I was acting for a purchaser of this property, and the seller solicitor initially couldn't understand why I wanted the lease varied, until I pointed out that in the last 24 years of the term of that lease, the ground rent was going to be £3 trillion a year. Which, okay, we're talking 1,000 years' time, but £3 trillion is rather a lot of money. So this has all been a bit of a problem in the industry recently. Government is now legislating, or looks to legislate, as part of their review of leasehold arrangements. It looks like we will soon not have ground rents on new leases granted. It's going to be, the ground rent will be set as a peppercorn, which is exactly what it says it is, one peppercorn. So no money will actually change hands for a ground rent. The main issue with that will be is that that's only going to help new buyers of newly built properties where new leases are going to be granted. What we don't yet have is any changes to existing leases. Whether there will then be pressure to do that in the future, I think there probably will be, because you're going to end up having potentially two different markets out there, one for flats that you don't have to pay ground rent on, and one for flats that you do. And it has repercussions both for, if you want to extend your lease, the value of your ground rent gets included in part of the calculations, and just if you want to sell, just the marketability of a flat without ground rent payments is going to be somewhat different if you've got sort of 400, 500, potentially more every year to pay. So that's where we are at the moment. The legislation's not gone through yet at all, certainly being put together as we see, but it's a watch this space at the moment, and it's going to continue being an issue, I think, for a good many years yet.
Thank you, that's really useful.
Thank you. Yilditz, I feel we have another subject on leaseholds. That will be another event to plan. Do I see any more hands? Yes, sorry, Mona.
Yeah, hello.
Yes.
Hi, everyone. I just have a question for Adrian, because I deal with new buyers in regards to their jumping into property ladder, and they don't have much of knowledge about leaseholds. Couple of them, they've asked me in regards to is there any way they can change their leasehold to be a freehold?
There is a way, but which actually it's Vicky's area of expertise, what I'm looking at now. With leasehold, there is a method for potentially leaseholders within a building to club together to acquire the freehold of that building. It's called enfranchisement. There's actually two ways it could happen. If, for example, the freeholder of the building wanted to sell that building, lock, stock and barrel, he has to first, subject to certain qualifications, first offer it to the leaseholders of that building, and then they can decide whether to club together to purchase that freehold, or they can force the freeholder to sell them the freehold. Certain again certain qualifications, which I won't go into, but there are methods and means, but you do have to pay for it. So it's not simply a case of converting it. It would have to be valued. You've got to pay full value for it, and it does require the participation of you can't do it individually. It needs at least half of the leaseholders within a building to club together to do it. It's a long process, but it can be a very valuable process if doing it. There is a halfway house as well, which some people find good. If the problem is not necessarily that you haven't got the freehold, but that you just don't like the management of the building, then there is a way of forcing taking over the management of the building by setting up a right to manage company, and you don't have to pay the freeholder to take over the management in the same way as you have to pay for the freehold, but you can force the taking over of the management of that building, and that's actually been quite a popular thing over recent years, because a lot of the issues with leasehold properties has been down to difficulties in dealing with the freeholders' management of the building.
Thank you very much. Does that answer your question, Mona?
Yes, it does. Thank you.
Thank you. Right, I can't see any more questions. So I'm going to thank everyone it's been a really illuminating webinar. Oh, here we go, the upcoming events. Thank you very much, Sandra. So can everyone see them? And we'll be contacting, well, you can book in on our website. You can get off this webinar now and book in for the next two. But as I say, I'd like to thank everyone for their professionalism, and we've certainly learned a lot today. So can we take that down, Sandra, do you think? Take our screen down. We can see everyone. Oop. Click to exit. So I'm just going to say thank you, everyone, and bye. Bye.